So Yakub Ahmed, call me Koob, with Franklin Templeton, and we've got a great group of panelists today. And it's a good kind of segue off of Brian's discussion. He talked about humanization at scale. We're going to get into digital engagement and really augmenting that with digital advice, digital platforms, ecosystems, embedding those FinTech resources into platforms, which I think is really exciting. I was reflecting on it was a conversation I had with an advisor probably 25 years ago, and he was a very successful wealth advisor, and he started up a retirement practice, and I was just super curious as to why he did that. This gentleman's based in Boston, and he's since retired, but he simply said because he could help more people, and it really kind of just crystallized for me, and he was completely sincere about that. In fact, he did a lot of pro bono work for nonprofits on the retirement plan side. And those words kind of stuck with me, which is to say, through one plan, in his words, you can help hundreds, if not thousands of people. You know, with all that said, and we're all here in the room thinking about the same thing, how to help US workers in their households retire with dignity, achieve financial independence, but there's still a lot of work to do, and we need to fill some of those gaps. I think if we're being honest, it's a little bit of an unlevel playing field, and I think with the help of some of these firms and FinTechs that are emerging, it's really exciting as to the progress that we can make. So let me introduce our panel, then I'm going to sit down and join them. We've got Sunil Gangwani, who's co-founder of Plutus, sitting here in the third chair to your left, on the left, from left to right. Anna Mahoney, who's founder and CEO of Addition Wealth, to the far left. Cash Lafferty, founder and CEO of Pando Alts. And Dan Beck, co-founder, CEO of 401go. I thought we could just do a quick kind of around the horn with these guys, with the team. Maybe a little more background on yourself, your firm, and maybe a fun fact about yourself, and then we'll kick off. And by the way, I like to keep things very conversational. If you have something to say or a question, please run up to the mic and we'll get you involved. Anna, why don't you kick us off?
All right, thank you. My name is Anna Mahoney. I'm the founder and CEO of Addition Wealth. We are a technology company that provides financial wellness benefits both to employers as an employee benefit, and we also partner with large financial institutions by enabling our technology to be a financial engagement and broader wellness offering to their clients. My background is in consumer finance, worked in the private sector for the government at the CFPB for a year, and then in technology at Uber for 6 years. Fun fact about myself, you know, I was really put on the spot with this one, so I'll just go with the scariest one. Sunday morning, chopping an omelet once, had a very sharp knife fall in my foot.
So Dan Beck, with 401go, this was an experience that I've owned a number of businesses prior to this with my brother, who's one of my co-founders for 401go. And in those businesses, we had tried to set up a 401k, and it was a challenge. And I thought that it likely wasn't unique, and we had a hard time finding service providers or advisors that were willing to take on a small startup plan. And so we decided to dig into figure out why that was the case. And that's why we built 401go, was with the focus of really kind of closing the access gap for SMBs wanting to offer these types of plans for their employees. And we, I think, picked the perfect timing for that, given all of the mandates that are now happening. There are 17 states that have passed some form of legislation that impacts those small businesses. So we found a really good problem, and we've fallen in love with that problem that extends to beyond just the small business, also a lot of the behaviors and the individuals that work at those small to medium-sized businesses. Fun fact, I think I kind of go with that theme, is I can do fractions on my hand. Due to a woodworking accident, I can do really good magic tricks and fractions, so kind of an advantage. So,
give us your best magic trick.
Let me show you. Okay.
Yeah, let's do it. Wow. Sorry, I asked. Yeah, that was great. Sunil?
Yeah, so Sunil Gangwani, co-founder of Plutus. We are in 401k space. Our objective is to simplify the financial planning or retirement planning for the end users. So we are offering direct to the consumers, or the employees, I should say, and of course working with the employers and financial advisors to make it simpler. So for our platform, you don't need to work through the employers. You can go directly to our website or app and you can just look at your allocations for your 401k plan. I think the interesting challenge for us is that we optimize for each 401k plan to make sure that the options available are perfectly matching the needs for the consumer or the employees per se. And depending on where they are in their life cycle, we actually analyze their real expenses, how they're going to project out to the future, and then kind of connect the whole thing together to say that, hey, this is how you should invest. Our focus area is pick the best investment options from the available options available in the plans, and also make sure that the fees that they pay is on the lower side. Fun fact I should say about me, so I am the lowest belt in my family. Everybody's a black belt. So I'm trying to kind of improve myself from being a punching bag to maybe a kicking legend sometimes. So we'll see how that goes. We're working through that. Thank you.
That's great.
Cash Lafferty. So I'm the founder and CEO of Pando Alts, which is the first open broker neutral network for private market deal flow. It's a lot to say. Happy to talk more about that. My background is primarily FinTech, but also did a run in AI, doing computer vision, which is a form of AI, on satellite data at scale. So actually spent some time in DC because of that. Also most recently was the head of financial institutions at a prime broker in the digital asset space called FalconX.
Fun fact.
Fun fact, I live in Bozeman, Montana, and my daughter is 10 years old, and she skis with a beacon, shovel, and probe.
That's amazing. I don't know what that means, but it's amazing. The fun facts were amazing. By the way, Anna, you're frightening me a little bit that your fun fact's a knife in the foot. So we're here to talk about innovation, and I want to kick off with a question for the whole group, and it's really around where the industry is and where it's going. And I look at the marketplace, and I've been in the space for almost 3 decades, and a lot of good has happened, particularly post PPA. We get more investors into the system. They're more diversified. We have better savings rates, but structurally, in my mind, not a lot has changed. It's still, we're doing a lot of the same things, and we obviously work in a very risk-averse kind of segment of the market. So kind of just curious, is this time a little bit different? And I'd just be kind of curious if you guys can share trends or thoughts on why this time might be different, and we might see real innovation in this segment of the market. And maybe I'll start with Cash.
Yeah, so I think for the private market side, this is a very paper-driven space. And for you to be able to see if a particular offering could be a fit for a portfolio, even if it's just a institutional portfolio analyzing an offering in private equity or real estate or venture capital or hedge funds, ultimately you're going to need data. And this is, sometimes 200, 300 pages of documents that you have to extract information from. So this acceleration in computer or large language models has actually given us the ability to extract information from these documents rather quickly, and then see if we could actually run a compliance platform through that in an efficient, accelerated way. So it comes down to suitability into any portfolio, and private market deal structures obviously have some illiquidity to them. We're seeing some acceleration in blockchain and tokenization that could potentially help that also. So yeah, I think we're making a lot of moves right now, and it's happening so fast. The AI that we use just keeps getting better and better and better. But to Brian's earlier points, I mean, it's a tool. It's not a replacement for anything. It's just actually making things more efficient.
Yeah, and I want to come back to you just to dig into the private investment side in a little bit, just to pull on that a bit, because it's an important component of where the market is going, and I think a real gap in kind of the lack of democratization of private investment. So we'll come back to you on that. Sunil, any thoughts?
No, absolutely. I think, as Brian said, that AI is not equal to DIY, right? So what we're trying to do is that there's a lot of need for personalization at this point of time. Everything is good, auto enrollment is great, but at the same time, you need still personalized advice. You need hand-holding. You need education where the people are. you need in bite sizes. And I think today's is the time where with the use of AI technology, you can make it happen. We survey people, we ask them, do you know what is Vanguard? Obviously, they know what is Vanguard. When you go down the route of saying, okay, what is Vanguard large cap, and what's the difference between large cap and mid cap? Nobody has an answer. I'm sure everybody in this room have shares in Amazon, but I don't know if everybody knows that every fund that you're holding, they have Amazon, they have NVIDIA. So I think the education part is with the technology is helping, and that's what we're trying to drive, that, hey, you need to know what you're doing, what you hold, so that you can make the right decisions and the technology is really helping in that pursuit.
That's great, thank you.
This is going to be kind of a boring response because when we're talking about AI and behavioral finance and a lot of these exciting things here, to me, I think just the simple fact that we're moving past, like Kash mentioned, that this is still a very paper-based heavy industry. And as I've kind of talked with partners and potential clients and whatnot, and we go to some of these offices that have like rooms full of filing cabinets and paper-based systems, a lot of stuff is still done in paper form. And I think a lot of the capabilities that we're seeing with AI, personalized finance, none of that works if we don't have good data, if we don't have good data exchange. And so identifying the needs of the individual, and so taking a very holistic approach to this, and then also being able to tap into those the users, the participants, outside accounts, and what's the the full picture. Because once we have that, then we can start to use a lot of the technology that's at our disposal. But there's still a fairly big hurdle that I think we are currently in the state of trying to move everything to digital. So that's something that's exciting for us, and that's the reason why when we built our solution, we wanted to start from line one. We're not sitting on top of some of the legacy architecture that's prominent in the industry. And so while it is boring, that's still, I believe, the first hurdle to a lot of these advancements that we're seeing now. Is just getting everything into a state of being usable with all these new technologies.
Yeah, and Dan, I want to come back. We can talk about that maybe when we get to the pain points, but data is central to everything, both the use of data, good data, but also the protection of that data. So I'd like to discuss that a little bit further, but Anna, go ahead.
I'll just quickly add, I agree that I think the technology and data that exists today enables a level of personalization for the end user that I think previously wasn't there. What is the next best action for one specific person, and helping figure out over time how does that change based on things that are taking place in the market, in their finances, as their goals are changing. We can do that today. I would say the second trend that I've noticed is a willingness to partner, right? And so I think we at Addition Wealth have always believed in the power of technology and the financial advisor together supporting an end user, because finances are at the end of the day a very emotional thing. And so it's not about technology replacing an individual, but actually how can you use this tool to better support an individual, to better support an advisor, and also to better support the companies that are also supporting the ecosystem of these advisors and users with financial products that they're providing them. And with that, we have also taken an approach where if you can partner with established institutions that have been around for a long time, that have very wide distribution, I think that's a very powerful thing. And I think previously there was a lot of, will new technology fully disrupt the ecosystem and take over? I think now groups, at least from our perspective, are working together and saying, how can we utilize what can be created today that better services an end employee, client, user, whatever you might want to call them, but that can also support the ecosystem that exists in the way that can benefit everyone and move the entire system forward more effectively.
That's great, and I want to come back to that as well with the group, because the ecosystems and platforms I think are the key, because there's still a lot of silos in the industry, and it's still fairly fragmented, and particularly in certain parts of the market. So I think it's an important topic that we need to come back to. Any questions from the audience? All right, and I'm going to stay with you for a second. I want to talk to Sunil about this too, but just in terms of what we're trying to solve for, and access was a big theme that we just talked about, and maybe the lack of access, and that's a little bit of the unlevel playing field that I talked about earlier. Access to workplace plans is an issue, particularly for small business owners, gig workers. You have about a third of the private sector that does not have access to retirement plans today. Access to financial planning and advice, there's a major gap there. And some people at my firm hate when I use these two categories, but I truly feel like there's the hunted and the ignored. You've just got, those with wealth are going to be fine. They have access to human advice and a suite of services. Those that are part of the mass kind of market of U.S. workers and households that need advice and financial planning generally do not have access to it. So Anna, I'm gonna start with you and just how you think about solving that. We talked about the workplace being a great entry point, but maybe you could share a little bit about how you're thinking about it.
Yeah, so I'll just say when we started the company, the goal was always to help an end user work through their financial decisions. We chose to go down the workplace path because the cost of acquisition is easier for an early stage company, and I fundamentally misunderestimated the beauty and the power of that relationship, because you can create for a much better end user and employee experience while also creating a much more scalable opportunity from a business experience. And that is because when you're introduced through the workplace, the employer can provide a company with accurate information that is relevant to someone's finances. Are they paid hourly or salary? Do they have a 401k? If so, is there a match? What are the benefits that are being provided? What time of year might someone be getting a 2% inflation increase or or getting a bonus? If you have an understanding of what that is, you can actually target those and groups of employees and help them in that moment say, okay, if you're getting a slight increase in your salary, why don't you think about putting that away? That is a much easier situation to have without a company having to provide personal information about that employee, by the way, to help them make the small steps or nudges to put themselves in a better position. And in that type of situation, the burden is not on the employee saying, where do I go and find an advisor who may or may not want to engage with me because maybe I'm the right target or maybe I'm not. And also when they go to engage, that a lot of that work and that information has already been passed and it's accurate. And so you can have a much more magical experience because it's less burdensome for both parties involved. And because of that, you all can also save time, which makes it more cost effective and also more quickly get to the question of, okay, what's important to you? How do we work through your needs, the personal piece of it? So I think that the workplace piece of this is quite important. And then I'll just say, I think that a lot of the models of the hunted and the ignored have been because there's been a very specific path that has been associated with how to provide financial advice. And not everybody needs the traditional model of sharing all of their information, having an ongoing advisor. There are people that if you give them access for an hour, maybe a series of conversations with someone throughout the course of their life, you can very much help them in a bit of a one and done way on a consistent or semi-consistent basis, and there are many flexible models that can support that, and I think we're going to see more of those. We certainly do that at our company, but it really enables being able to provide ad hoc advice to people in moments that they need it, in a way where you can start to service a segment which doesn't really fit into the hunted, but also doesn't deserve to be ignored.
Yeah, and by the way, I love your shoes, Cash. I mean, Dan.
Oh, thank you.
I like your shoes too.
Thank you.
Sorry. So I want to Anna, can you talk a little bit more? First of all, I love the perspective of all of you because you haven't grown up in the industry per se. So I think a lot of us, you grow up in this industry and you tend to kind of have a little bit of an echo chamber. And I'd be curious, just particularly with your background around consumer protections and working at Uber, any lessons learned between those two experiences into what you're doing now?
Yeah, I mean, I'll just say, so I worked at Uber for 6 years prior to starting this company, first on the transportation business and then on the delivery business. And we basically learned how can you make things affordable to people that have previously been inaccessible. Access to a private ride at your doorstep when you want it, and the delivery of anything that you need. And the way that happened, besides having a lot of really awesome people work hard at it, was breaking apart the models and saying, okay, how can I get people the exact amount of support that they need in the moment that they need it? And I think that those same models, scaled product and offerings, flexible working models for the people who are providing it, and scalable organizations, you can take all of those lessons and apply them to providing more people with access to financial advice. It's not that you have to hire a limo driver full-time and have them available to you. You can figure out, okay, how do I break apart the specific things that people need, where they need it, how they need it, and then use technology, group sessions, and flexible support to provide it.
That's great. Anything on the data protection side?
I mean, I think you obviously, first and foremost, have to have a lot of data protection, but that's very feasible. I think you can be really careful about what you share, how you share it. I think this is a matter of connection, and so you don't need to collect more information that you need. You don't need to ask for it up front. You can service individuals with allowing them to control their data and how they give it and how they share it. I think that's a matter of how you set up the technology, but I think it's very feasible.
Yeah, and maybe just, we didn't discuss this in our prep, but I'd be curious your thoughts on blockchain at some point and enabling that kind of environment. But Sunil, let's kick it over to you to continue that discussion on financial planning.
Yeah, no, absolutely. So I guess I can stick to the access.
Make sure you get your mic there, sorry.
Can you hear me okay?
Yeah.
All right. I think we can, I'll just stick to the access for a second and the lack of knowledge, to be honest, that's a major barrier. And when we talk about the information piece, right, so on our platform, we don't ask for social security, for example. We just wanted to make sure we don't take the data that we don't need. And the financial planning is more real time. You know, the action should be right there. Information should be available on your mobile, on your website, wherever the user is. The attention span is so short right now that, you know, it's very hard for people to be engaged for like 15 minutes. It's more like 30 seconds or a minute. I think that's really the financial planning has to go to that level that you have the information right available, and then they can use it. And it's kind of changing real time too. I know the market is kind of, you know, going through such a turmoil right now. So we're getting a lot of questions, you know, what should we do? Although we are there for the long-term investment, at the same time, you should be able to provide some answer right away that, hey, maybe there is a time to dial down a little bit, take the risk off a little bit from the table, you know? So those are the things that we're having the conversation, and that's where the financial planning is very critical. You need to see the overall picture of the user, not necessarily just the 401k plan. Now, nobody actually seeks that information, to be honest, right now. Even when you talk to the advisors, they spend a ton of time just to assimilate that information that, hey, what is my financial profile of this client? And we at Plutus, we try to bring everything together in a seamless way. You have the financial profile available so that it's real time. You know, you can take actions right there and then. So that's what we are trying to push for in financial planning terms.
That's great. And I want to continue with the access theme, and I want to go to Dan and then to Cash. But Dan, from your perspective, we talked a little bit about the gap in coverage and how you're thinking about that, and how you're attacking it. You know, because that's a big undertaking for the underserved, for small business owners and those that don't have access, gig workers and the like. And anybody can jump in on this, by the way, but I'd like Dan to kick us off.
Yeah, the way we see that challenge is that it's very interrelated. A lot of times when you look at the worker demographics of small to medium-sized businesses, they skew younger, more entry level, higher proportion of minorities are working for SMBs. And so with that in mind, it's not only do you have the challenge of accessing the employer, and for us that's I kind of joke that the 401k is the gateway drug to financial wellness, and in many ways it is, and especially when you look at those younger, more, the newer entrants to the work environment, when they're oftentimes their 401k is the very first time they have saved for retirement, or just saved, period. And I've seen that time and time again. This was the primary reason why, as a small business owner, this was of interest to me. The other challenge you have is that in those organizations, you don't have HR leaders that have experience with ERISA law and access to attorneys that can help them navigate some of those challenges. And then on top of that, attracting a financial advisor when that advisor knows, okay, this 50-person company, it's going to be a long time before there's sizable assets that I can receive adequate compensation for. And so there were a number of challenges that we really had to solve for. And first and foremost, it's about scale and it's about automation. My background prior to this was more consumer products, where we had one business, our gross margin was 2%, so we had to have almost 100% automation from start to finish with a lot of those transactions. And so I joke that I've taken a lot of what I've learned in you know, getting people to buy stuff they probably didn't need to do things that they should be doing, and that's saving for retirement, it's planning for the future. And so for us, it's about there has to be a lot of automation, there has to be scale, you know, in delivering the advice, leveraging AI. And so there's a number of challenges, but it really, for us, it comes down to automation. It comes down to simplicity, reducing that friction. And when you do that, if it doesn't take an advisor 7 weeks to set up a plan as they're, you know, working with a TPA and a record keeper and, you know, everybody that's involved in offering a 401k, if they can now do that in 10 or 15 minutes, then we can realign those incentives. Then there might be some interest in helping a segment of the market that's previously been really inaccessible, not just for those companies, but there's an access issue for the service providers and being able to afford or to make a profit going after that segment. And then that translates down to the individual as well. It's how do you deliver advice to somebody that really has no assets? And again, that's where there's a lot of incredible technology that's at our disposal now. And I think that's the exciting thing is they need data. They need you know, newer platforms enabled to access those individuals, and we're happy that we can be a piece of that.
That's great. Yeah, Brian talked a little bit about how saving's not a kind of a natural thing. Apparently, you've got the gateway drug to make that happen. But I also want to like get into the adjacency part too, because and I want to get to you, Cash, because this is part of the adjacency on, you know. We talk a lot about DC. To me, that's a little bit of one spoke in the wheel. You know, there's a broader kind of contextual, holistic approach that we need to think about. And Anna, you're obviously focused on that. But for the gig worker, which is, you know, obviously going to continue to grow, how are we thinking about that particular population? Do any of you have thoughts on that? And then Cash, will come back to you on the private investment side. And feel free to jump on this, by the way.
I'm happy to jump in because I think that the way that you can configure holistic solutions to help people with their finances can be very catered to either specific types of individuals, and that can be based on their age as they're entering a specific life phase, and maybe they're thinking more about retirement, or maybe a career cycle that someone might go through, or a specific way of earning, right? So if you think about a medical practitioner, you probably have 3 phases, right? You are graduating from medical school full of debt. There are specific questions that you're going through. When you're later in your career, maybe you need specific insurance products that support you in that phase. And then as you're older, potentially you have more savings and wealth, right? And so if you can work with someone through a trade organization, you can actually create an experience that follows that specific type of individual's journey and pull in different financial products, experiences, content, advisors that understand that can service that group of people. And I think it's similar with gig workers, right? They have a specific experience, a different type of earning. They need to collect different information to know how they're going to file their taxes. Maybe you can even support them, right, by giving them, and we don't work directly with them, but you could do something like create a debit card that has rewards for the types of expenses that they know they have: gas, car maintenance, different types of insurance. And so I'm answering your question a little bit indirectly, but I think you can actually, with today's technology, and we're doing this with specific groups, say, okay, what does this specific type of population need? And then configure an experience for them. In this case, the gig worker experience, where you say, okay, what type of support do you need when you have inconsistent earnings, or when you don't have a social safety net of benefits that many people have, and when you need to pay taxes in a specific way, or you have more of the burden of saving for your own retirement, or where you don't have coverage if something happens to you. And you can actually build an entire ecosystem that helps educate, that engages people in the mobile app, not on their computer, because that's how people are engaging if they're a specific type of worker. And then also pull in different partners that have a vested interest in engaging with that group, and hopefully even have purchasing power so that you can bring best in price models to that group of workers. And so I think where we are is a moment where we can actually get hyper personalized in a way, again, that can make it better for a specific set of end users, where you're creating an experience that benefits them and also the other people in the ecosystem that are trying to support that group of individuals as well.
Yeah, it's great. It's, you know, going back to the theme of meeting them where they're at. And, just you think about the non-traditional workplace, and you talked about some opportunities to access those employees. That's great. Anybody else want to jump in on that?
I guess a couple of things I'll add there. For the gig workers, as Anna was saying, right, the personalization is key, and that's what we provide, like the planning aspect of it. I think the IRA product is very attuned for their needs. But one other thing that you are also seeing that people are changing their jobs very frequently right now. You don't work for one company for 20 years where you have just one plan. So what we offer is that whether you worked for a small company, a mid-size, or a big, if you change jobs, you can access all your 401k plans at one go, or one place like us. You can just search for it and you can see where you need to put your money to work. Now, if you wanted to move money to IRA, that's a totally different story. But if you still wanted to stick to your old 401k plans because the offering is pretty good, the fees are low, we even support that. So not just the gig workers, but also on an average, what we see is that people are just 3 or 4 years in one job, not 10, 15 years. I mean, that's just the trend that we're seeing in the market.
Yeah, especially with younger employees.
Yeah.
One thing I'd like to add, and this is something that I think is a challenge for the industry as a whole, is that it's very productized. And a lot of times when an advisor is meeting with an individual, it's determining, okay, should you be in an IRA? If you have a business, should it be a SEP, a solo K? And then you've got pre-tax, post-tax. Like there's a lot of complexity to the industry, and we're trying to help kind of decode and then deliver a set of products. Whereas our preference is let's focus on the outcome. What's the outcome that you want? And for some individuals, as a gig worker, like an IRA may be enough. Like that's the $6,000, $7,000 a year is all they can put away. But somebody else may be able to put away a lot more. And so in that instance, they should look at something else. And so I think the power of the technology is once we really get to understand the individual's needs, where they want to be, then we can kind of remove the productized aspects of it and deliver a solution, deliver an outcome. And so that's something that we get excited about, and it's the same thing when you, again, look at the demographics of employers with those SMBs, and they have an even higher turnover rate. They're going to be with an employer for less than 2 years. And so you've got to build solutions that are all supportable. That's a big challenge, especially when we start talking about like retirement income, and there's some real issues too, just the changing preferences of workers today, and then how that impacts the solutions that we're delivering.
Yeah, that's great. Any questions? We'll probably have a few minutes at the end too. I want to pivot, just stay with access, but get into private investments a little bit. Cash, yeah, let's do this thing. It's near and dear to our heart too. I mean, Franklin, this isn't a commercial, but we've made 4 acquisitions over the last several years on the private investment side, and we've done that because all of the firms that we've acquired have institutional reach and distribution in the marketplace, but they don't have access to the wealth markets or to the retirement space. I want to get into, and it's needed, as you all know, and the public markets are clearly shrinking. There's half the number of public companies that there were 20 years ago, so you're not benefiting from the full kind of markets continuum as an investor. Cash, love your thoughts on how you're thinking about it, because it's difficult to execute and operationalize in the DC space for some very obvious reasons that everybody knows about in this room. How are you thinking about approaching that?
Okay, so
you have the floor. Go.
I'm going to pull on Anna's thread on the Uber side of this. So if you think about what technology is bringing us, Uber brought us chauffeurs. Airbnb brings us all the vacation homes around the world that we wanted. Well, right now, if you are a family office, you're ultra high net worth, you're a pension and endowment, you're probably 50% allocated towards alternatives, private markets. But for the rest of us, it's 60-40 stocks and bonds. You could talk about 10% annualized returns in a diversified equities portfolio, only if you're in the top 7. But then again, look at the financial crisis, and you tell the person that was retiring then that 60-40 stocks and bonds is a diversified portfolio. I mean, it's not. So private market access has been limited because of these technology hurdles, 1, obviously illiquidity, 2, and regulatory. And so we're seeing some lightening on the regulatory side, but it's still really operationally burdensome, and we're kind of changing that. Dan actually mentioned the legacy technology infrastructure. That's got to change. We're not going to be able to get there with some of the kind of old private equity-backed technology that's out there. I'll give you an anecdote. So as the head of financial institutions at a very large prime broker in the digital asset space, we were dealing with the largest institutions in the world, some of them sitting right here. And one of the issues is actually just the number of decimals in digital assets. Can't even book this stuff into the back office systems of traditional finance technology. So we need to start
Dan can do fractions on his hand.
I can help you
Just in
out.
case you need
It's
help.
non-digital.
You guys can talk
Well,
later.
yeah, so truncation, right? Like, we've got to get it down to the ability for it to get into these back-end technology tools so we have good investor reporting. And when we're starting to think about the way that we operationalize investments in general, and everybody's doing this in a way where we're giving customization to the end user, it is very data dependent to be able to see if there's an offering that's a fit for that end customer, whether it's in equities or any asset type. And so with AI, for lack of a better term, it really is just a tool to be able to extract information and put it into a place where we can start to consume these things into portfolios in a way that meets the needs of the end investor. So you'll never be able to adhere to the guidelines of the ERISA plan if you don't have the understanding of what those guidelines are, so there's a contract on that side, and what the data is on the other side that you need to be able to pull and match. And so finally we're getting there. We're starting to get there with accelerations in AI. The liquidity question is really about, to me, duration. So, what's your investment horizon? Maybe you don't want everything to be super liquid. Right now, if you're looking at the markets and you're starting to panic, we're probably going to see a pretty big downdraft in the equities markets. That's not always a good thing for a retirement plan, in my opinion. So I think for IRAs, you should probably be thinking about investing into more illiquid assets if you're a younger gig economy worker. I would prefer that you had something that was longer duration in your portfolio, and you weren't just tied to the performance of equities. Does that answer your question?
No, I mean, we're sitting here in DC, so I'm just, you're thinking about this every single day. How are you in this current administration feeling better about, or what are your thoughts on just regulatory error cover as it relates to private investments?
I'm long Trump and Melania coin. That's where I'm going with it. I think that we've seen this starting to happen in retirement plans for IRAs. So at least self-directed IRAs are starting to move that way. The defined contribution plans, I think, are going to be more difficult. I think it's going to start just with 40 Acts and interval funds and things that give you better liquidity terms. But that's kind of how it started with equities. I mean, with equities, there was only this broker will give you this menu, this broker gives you this menu, and then ultimately everything gets diversified, democratized, and now we can trade anything through any broker, and it's all kind of the same. But that's a very clean, data-driven world that lives in, and we're starting to get there on the private market side also.
That's great. There was, with the flurry of executive orders, I was hoping that there'd be one on daylight savings time, but we never got one.
Me too.
I got a note from Barb. She likes Dan's shoes too. Kidding. She asked us to take a quick pause and just see if there's any questions. So the mics, or do you want to, maybe if you can grab a mic, that'd be great.
While she's up there, Cash,
Yeah.
how do you balance your name of Cash with your long-term investment perspective?
As the head of prime brokerage at a digital asset, I was almost Fiat. They almost changed my name to Fiat at FalconX. Yeah.
Okay, so here's my question, Cash. So really great, and you definitely hit on all the key aspects in terms of regulatory guidance and liquidity, and the tech aspect is really interesting to me. But I think part of it also is how do you communicate all this to the average participant? Because, the liquidity thing is huge, and how do you how do you do this in human terms, in basic English terms, so that people understand they're getting into something that may not be as liquid as they think it is?
That's a good question. I think it starts with the data. So you have to be able to understand exactly what you're getting into when you're getting into it. And a lot of things can get buried in 200 pages of documents. So getting that level of transparency and it being able to see everything kind of apples to apples and with a nuance. And I think that then on the allocator side, being able to put the framework in place that says this may be a potential match. Even if you don't ultimately do it, you still should be able to filter out everything that isn't a good fit and get down to the things that may be. And then, for me personally, I actually use GPT and Anthropic and Grok. I mean, I pull information from those documents and then I'm able to look at it for my own personal purposes and say, hey, show me all of the risk profiles to this. Show me all the things that I should be thinking about. And how would I communicate this to my 10-year-old daughter that uses a beacon, shovel, and probe because of it's an AVI 1 course. Sorry.
Sounds like something I'll never do.
Yeah, no, it's probably not good for anybody to do.
Yeah.
So I think that we're giving better tooling to the allocator. We're giving better tooling to the GP, the fund manager, to be able to communicate the data that's on both sides and give that compliance view of, should we do this? Is this suitable? But also, if we do this, what are the risks? And communicate that clearly because we have the data at our fingertips in that conversation, and I think that that's really valuable.
Yeah, I think it's, we've given it a lot of thought too, and you hit on the key points, which is, you need professional allocators. Advice, I think, is important in certain instances, particularly if you're doing it through a managed advice program. But, simplicity is going to win in our space, and it's difficult, and it's easier to embed, and probably the right thing to embed into multi-asset kind of solutions, and do that appropriately with professional allocators is the right approach with a lot of communication.
But the pensions and endowments are there.
They are. Yeah, it's and I think it's the inherent kind of roadblocks within DC of daily val and fees, and particularly in fees. And what we've seen, it's interesting. Large plans would be the likely buyers of private investments because they have investment sophistication, they've got economies of scale. It's difficult because they're the target of the litigators, so they're very as innovative as they may or want to be. Particularly post Intel lawsuit, that's all slowed down a lot. We've actually had success, and I'm sitting here with my colleague Kevin in the back of the room, but this is something that he was leading on, is developing solutions for kind of what we'd call the core of the advisor sold market and packaging products there where you have really innovative intermediaries, but less risk as proof of concept to really demonstrate to the market that it works. And delivering products that can be delivered in managed account programs, in a non-core kind of sidecar, or in some instances even in the core menu. And I know Ed Murphy's here somewhere, but they have the capability to deliver, I think nowadays, even on the core menu with guardrails. So the market is moving for sure.
I think you're right on the fees too. That's a thread we didn't really pull. That it is something that I think everybody's going to have to take a look at, and obviously you need the data for that.
Any other?
One thing I want to add there, because this is, I think, when it comes to alts, or for us in particular, crypto, there are when we surveyed our users, because we had access to some crypto ETFs, and we were concerned that maybe us offering it would be viewed as irresponsible. So we wanted to talk to our advisors and get their thoughts around it, and also plan participants. And there was, it was overwhelming. Some 90+% wanted access to that. And so, sadly, that could be that, our general user base isn't as informed as maybe they should be. But to us, the way we view it is if they want this, and a lot of times we're trying to overcome what I call that first dollar hurdle. If this is something they want, how do we deliver it? And yes, there is some, it can be high risk and everything else. And so I think that's The question that is now secondary is how do we get them involved in this if that's something they really want, if that's something that's going to engage the user, then that's obviously something we want to offer. And then the second question is how do we put guardrails around it? How do we educate them along the way? But guess what? They're not going to learn about it unless they're actually involved in it. And so for us, number one, it comes down to engagement. So we need to figure out how we can offer these, and private equity, that's oftentimes, people won't understand what large cap domestic growth is, but you say Bitcoin, and I guarantee you there's going to be more interest in that than maybe large cap domestic growth. And so they're all important, it's just for us, I think a lot of it sometimes needs to be more focused on what is it that people want. And so we're excited by alts and hope that there's less regulatory burden.
It's a fairness issue as well. Go
Just one thing we want to add, and this was an interesting aha moment for us. So people were asking, why don't you have Bitcoin in the portfolio? So you need to understand the volatility, that how much of that particular investment is giving volatility and how much return is improving. Like a small allocation of, let's say, 2.5% or 2% was kind of improving your return quite a bit. I'm not suggesting that everybody should jump to crypto or things like that, but you need to just have, the quantitative data to kind of support it and see, if that's helping you in the longer term or not. And that's how you make a decision on it. In fact, we compare Tesla versus NVIDIA versus, Bitcoin. You will be interested to see how the volatility has come down a bit on the Bitcoin side compared to, Tesla stock even today. So that's the interesting moment where you need to figure out the quantitative way of looking at it, rather than just saying, hey, I don't want to be in this, and that's just not a judgment call on the face of it, but just trying to understand what exactly it means for your portfolio.
I just think the next generation is definitely more educated than we give them credit for, and the digital asset side, I don't think that it's all Trump and Melania coin. I think that there's some actual businesses there. There's really, true diversification in some of these things, particularly Bitcoin. So I don't know. I'm a libertarian. I want to give everybody access to everything and let them make their own choices.
Me too. Any other questions? We have about 5 minutes left. Go ahead.
My question is, as advice and guidance continues to be digitized, what do you see as the evolving role of the financial advisor in the spectrum of providing continuing to provide advice and guidance?
That's a big one. Let's make that our closing question because we're going to run a little bit tight on time, and maybe couple that with any closing thoughts. But anybody want to jump in with that?
Yeah, maybe I'll start. I think the technology is here, so we cannot say no to it. I think our purpose as Plutus is that we wanted to make sure the advisor life is simpler. They can see everything at one place. And at the same time, it was one interesting thing that we noticed that when you call a person, your client, and ask them that what are your assets and liabilities, they tend to not give you the information. I don't know why. But when you tell them just link your accounts and you can delegate to me, it's much easier conversation. So you can see that at one place. And once you have a wholesome picture, I think the advisors are in a better place to advise, to be honest with you. If I already see that, okay, this person already holding Tesla and Bitcoin, then I will steer away from him, from those particular assets, because now you can see the whole profile. So that's just my personal view and Plutus view. That's what we wanted to work with the advisor to make sure that you need to see the big picture or the full picture. And I'm not saying you're not doing it right now, but technology is just making it even easier at this point of time. And mobile is the next thing, or mobile is here. People are used to Instagram right now. They want short information, quick information, and that's where you have to meet them.
That's great.
I'm happy to build on that because I agree. We believe that technology plus an advisor is much more powerful than just technology or just an advisor. And so how do you bring them together in a way where advisors can connect with the end user? There are a lot of people who are too scared to speak with an advisor today because they don't know how to do it. Imagine you have, and by the way, we're moving in a trend where we increasingly have fewer CFPs and CPAs relative to where the population may need them. And so I think technology is actually the key to be able to enable advisors to reach more people and service more of them in a way where they can lean into the moments of human connection that are the magic and the enabling of reach with more individuals. So I don't think at all it is about displacement. I think it is about the empowering of the advisor.
For us, we're very advisor-centric, which oftentimes, FinTech and advisors sometimes sound like they're at odds with each other. And the way we view the role of the advisor is more like a coach. And the challenges that oftentimes advisors love to focus on are the ones that they're really not great at solving. And those are like the quantitative issues, like maybe portfolio selection. And frankly, when you're looking at and analyzing fund performance and expense ratios, an algorithm's probably better at that than an advisor that's trying to, read the market tailwinds. But where that advisor really comes in and has an impact is in motivating those human behaviors. It's the behavioral, it's the emotional side of it. And so I think as those advisors start to, utilize some of these tools for the more quantitative aspect of their role, then that frees them up to focus more on how do I engage somebody, how do I motivate them, because that's the bigger issue. It's about getting that engagement and that motivation, and that's a behavioral problem. It's not a quantitative problem.
I think your advisor is your second call on your deathbed. I mean, it's instrumental to your life. You have to have it. And having better tools is just a boon for them. They can have more intelligent conversations. They can, to Sunil's point, have a better understanding of your entire picture, and be a better fiduciary for you. I think that's wonderful. And I hope it continues and accelerates. And I hope they have more options to provide you based on your demand and your needs. And that's where I want to see everything go.
Is that helpful? Yeah, I mean, I think I'll just add my perspective as we close here, but our CEO often uses the analogy of TurboTax, and what she'll say is, when TurboTax was deployed, everybody was like, this is the death of accountants, when in fact it just allowed them to take on more clients. And I look at advisors, I mean, we all know the stats and demographics of advisors. It is an aging population, there's a recruitment issue, so they need that augmentation. But the human component is critical. You also want to meet people where they're at. So there may be some consumers that prefer a direct and digital only kind of relationship, maybe graduate to an advisor at some point. So you need some optionality. And I do think the power of the workplace, which what we're talking about today, is a great way to intermediate some of those resources and tools and deliver advice with still a plan advisor or consultant sitting there as an intermediary between the financial products and solutions and ecosystems that we're talking about to the employees, but through the workplace. So that all feels very efficient to me. But I want to thank the panelists for a great discussion. I want to thank Barb and Cheryl and Ibri and Milken and Bridget for their help and support in allowing us to speak to you all today. And have a great rest of the day. Thank you.
Thank you.
Thank you.